I was like, did I miss my window? And she said, I don't know if you missed your window, but, and then she asked the question that I thought was really like burned into my soul, I think you would say, is fast forward 20 years from now and say you didn't take the shot of pursuing what you felt would be the right move and career for you. Would you live with regret? Man, that's a good question.
Hey everyone, this is Jen Foster with the Elite Expert Insider Podcast. We're really excited today to have Eric Mangold with us, and he is transforming financial futures with compassion and expertise. He is going to be talking today about growing your wealth after a late start. So if you're a late bloomer, we're going to dive in and you're going to get firsthand knowledge from an expert who has witnessed everything in finance, and now we're going to dive in. So Eric, tell us a little bit about yourself.
Thanks, John. Thanks for having me. So I guess we can turn it back the clocks to where I studied financial planning in college. I was a finance major, and then in my junior year in college, they launched a curriculum called personal finance for those people that thought they wanted to be financial advisors. And it sounded really interesting. So I jumped in, and a lot of the curriculum was interning. And I went to school in Rhode Island, and there was a great advisor there that frankly let me be a fly on the wall. I went in and he would allow me to sit in on client meetings and everything. And it was awesome watching the interaction of the questions and concerns people had and how he was able to address them. And I was like, this is what you do every day? He goes, this isn't everything, but yeah, this is a big part of it. I was like, people come to you for help for money questions, and this is where you're helping them. And I'm like, you get paid to do this? He's like, yep, we do. So after college, I went and tried to find a way to get my foot in the door someplace. I joined Merrill Lynch as not as an advisor, but I was a retirement plan representative. So a financial advisor would put a 401k plan in place and for a company that he was working with, and then we would implement it. And a lot of hand holding, a lot of great experience there. And then about 3 years after that, I finally got my shot at getting an interview with a branch director of financial planning here in Philadelphia, which is near where I grew up. And he basically said, okay, you're 25, you still have your student loans. You don't know anything, you don't know anybody. How are you going to make it in this business? I said, that's a great question. And so I started talking about some things, and he said, listen, it sounds like you're genuine in your thoughts and you're genuine in what you want to accomplish. Because I just don't think you're ready, because I'm going to stick you in a room with a phone and a phone book, and you're in a cold call 120 hours a week. And in about 3 months, you're going to come tell me how much you hate it, or I'm going to have to fire you because you're not making any money. And he goes, and I hate to do that because I really think that we're changing people's lives here. So what I'd really like you to do is round out your skill set, go learn, get a job in finance, go learn, go meet people, go build a network. So I went and joined Mike Bloomberg's company in New York, selling the Bloomberg financial software to traders and analysts and economists and portfolio managers. After about 7 years there, which is another great, fantastic experience. There isn't a trading floor that I really haven't been on.
Uh-huh.
And a startup opportunity came my way. It was a little too good to pass up. And everything that they said was going to happen did happen in terms of how they're going to grow, get bought, all of this and that. But I wasn't excited. I wasn't feeling like I was doing anything to help anybody.
Yeah.
So I ended up hiring a career coach. The career coach was
Coaching a coach
fantastic.
is great because if you have somebody that you can bounce ideas off of who knows what to do.
Oh my
I don't know
God.
any business owner or any person that doesn't have a coach that, coaches are great to have if you don't
They
have
are
one.
great coaches and they are worth double their weight in gold. And she said, what about financial planning? Why have we veered so far off course on that? And I was like, I was 38 at the time. My wife and I were getting ready to have our first kid. We were moving and I was like, did I miss my window? And she said, I don't know if you missed your window, and then she asked a question that I thought was really like burned into my soul, I think you would say, is fast forward 20 years from now and say you didn't take the shot of pursuing what you felt would be the right move and career for you. Would you live with regret? Man, that's a good question. Anyway, so
Right?
long story short, I reached out to my network. I interviewed probably at 6 or 7 different places and found a small firm that I started with. Actually, it wasn't small. Guardian Life Insurance. I started out at Guardian Life
Okay.
Insurance and then had a couple of firm hops along the way. I'm really trying to find the right culture. And then about 3 years ago, I was presented an opportunity to hang my own shingle in partnership with a larger firm called Summit Financial. But I'm able to hang my own shingle as Argosy Wealth Management by tapping into their legal compliance. But it's 14 years in the business, and now finally having my own practice has been pretty awesome.
Yeah. So you're a financial planner, you're wealth management. So what kind of advice do you give to someone who is, oh, I haven't really invested and I'm going to be 50 now. So what do I do? Like, where do I start?
I think
Um,
one of the biggest first things is understanding that it's never too late. It really is never too late. Now, I think we can do some pretty magical things with people that we're worked with, our clients that we're working with. I can't get blood from a stone, but I think people realizing under the first premise that it's never too late to start. The other thing is that it is a little bit of tough love because, Jen, when our parents were growing up and working, they would stay with the same company for 25, 30, sometimes 40 years.
yeah.
My dad is a great example of that. He was with Bell Telephone, then it became
Hmm.
AT&T, then Lucent, then ultimately Verizon, all the
Yeah.
mergers. So what ended up happening was that you would get a pension and you would get Social Security, and whatever nest egg you had was like the icing on top. But now that totally has been inverted, where like now pensions aren't really things anymore. They are, but most companies don't offer pensions.
No.
Social Security will be there, and there's a lot of doom and gloom about Social Security. It'll be okay.
Yeah.
But the biggest thing is that the nest egg is now the biggest part of everyone's retirement kind of happiness.
Mm.
So the responsibility is all on our shoulders. So if someone's 50 and they're like, "I'm never going to be able to retire," not taking first understanding it's not too late, but then also taking action. Because if you don't
Right.
take action, when you get to 65, there really are no do-overs.
Yeah. That's true.
So
So, would you suggest doing it in reverse order, which is like saying, this is the amount I want to retire with? And then how do you get there? Or how do you approach someone who says, I haven't started yet, but I want to retire in 15 years and I need $1 million?
okay.
What would you say?
So the
Or I
one
want $1 million, I should say.
One premise of, okay, there used to be a commercials with ING, who's now Voya. They used to have all these people walking around and they had these bubbles over their heads with this number that was calculating automatically. It was like, what, remember
Yeah.
that commercial? Like, what's my number?
Uh-huh.
And the reason that you can really shoot some holes in that strategy is because if I think I need $1 million to retire on, what if we could make it 1,000,004? Or what if we could make
Mm-hmm.
it 1,000,005? But we're only targeting for 1 million. Are we not shooting our sights high
Right.
enough? And also, if we're looking at a number, we put ourselves in a box. You know,
Yeah.
I
And you
want
create
people,
your own ceiling, basically.
yeah, totally.
Mm.
I want my clients to generate and grow as much wealth as they possibly can, regardless of what that number might be. So how do we go about that? So what I show people what I show my clients is we typically build a retirement projection for them. Okay, you're 50. How much do you have saved? How much do you have invested? How much do you spend? Do you want to retire at 65? Do you want to retire at 67? Do you want to retire at 62? And then we build a projection for them that shows a reasonable growth rate, a tax rate, and okay, here you are today at 50. Here you are today at 65. What does this retirement look like for you? And then we can typically tell, are they happy, sad, or different? Hopefully
Yeah.
they're happy. But if they're
Yeah.
not happy and they're like, oh, we need to make some moves, then I can recommend certain things that they can do so that,
Hmm.
yeah, they can reach that summit that they're looking for.
Okay. So what kind of products do you recommend? Is it all investing in the stock market? Is it IRAs? Is it 401ks? Like,
It
what
really
kind of
depends.
products do you recommend?
We have a saying that everybody in financial planning, everybody is their own unique snowflake.
Mm-hmm.
So everybody's different. I have clients that come to me with massive real estate portfolios and are
Mm-hmm.
looking to generate different types of income from those real estate portfolios. I have clients that just do stock trading. I have clients that,
Mm-hmm.
a lot of in the middle. So
Mm-hmm.
I think what I try to do is that I'm not product specific. I'm really product agnostic, but I'm more strategy specific. I want the
Okay.
best strategy that's going to grow the most amount of wealth.
Yeah.
And then when my clients retire, what's going to put the most amount of money in their pocket each and every month,
Right.
regardless of what the stock market does?
So whether that's real estate investing or IRA or Roth or whatever,
It's a
Roth
mix.
IRA, self-directed IRA, or
Yeah.
what about life insurance? I've heard people get life insurance policies, or what is it called? Not term.
Whole
What's this?
life or
Whole life
permanent
insurance.
insurance. Yeah, permanent. I am a believer in protection because protection, especially for folks that I'm working with that just started a family, and before we start really talking about investing, we talk about the life insurance because the rates of return on their investments, which everybody cares about, are completely irrelevant if you can have a car accident or a
Mm-hmm.
sickness or a death completely derail all of your assets. Okay, so that's
Right.
why excuse me, we'd look at called a protection first strategy. Let's protect this house first, and then we'll work on the investments. But insurance, permanent insurance does have typically can have a place in a retirement plan. Most people buy insurance for when they get a mortgage or when they get a family or
Hmm.
when, they need it until the kids are out of the house after college.
Yeah.
But with permanent insurance, if you don't need it anymore, you can then repurpose it and then use it potentially for your retirement or estate
Oh,
plan. It does have some Swiss Army knife type of themes to it.
yeah. So your approach is really the individual deciding what they need, what strategies you can use, and the best approach towards that, whatever product that is, whether it's real estate investing, stock market investing, life insurance, or any other investments.
Yeah, you start with the human. You start with the human,
Yeah.
and you work your way to the strategy.
Right.
Yeah.
And would you say, like, with the economy today and with all the different ways to invest, let's just talk about, I have college age kids, right? So
Mm.
some of them are buying a little bit of crypto, some of them aren't. Some of them are, oh, I have a Robinhood account, so I'll buy a couple stocks in there. Or I have the Cash App or the Venmo app. You can buy some stocks or buy some
Hmm.
crypto, dabble here or there. What would you recommend to them just starting out, 20, 23 years old? What would you recommend they start doing to
I think
invest
the apps
money?
are great for people to start out of the gates because the first thing you want to do is really do your research. And I think these apps do a great job of helping people understand more about their investments that they're getting
Mm-hmm.
into, whatever it may be, whether it's crypto or stocks or real estate, whatever it may be. Do your own research and don't rely specifically on someone else to do it for you.
Yeah.
With stock investing, I always share with people if you're looking to invest in a stock, invest in something that you really like. And I'll break this down, and I'm probably going to be dating myself here, but I have a client whose husband went into an Apple store to buy an iPod, not the
Hmm.
iPad, the iPod. So
Yeah.
yeah,
iPod.
dating myself here.
Yeah.
But he walked into the Apple store, looked around, and was like, "This is the coolest store I've ever seen in my life." He did end up buying an iPod, but he was like, "This is unbelievable." So he walked home that day and bought a few thousand shares of Apple.
Mhm.
This is going back, what, 30 years, right?
Yeah.
And but he believed in what he was buying because he was a customer of himself. He saw the interaction. People were coming out, people were excited. I've never seen people so excited to buy a product before when they were buying this
Hmm.
music machine.
Yeah.
So if people can do a little bit of research on their own and find something that they really enjoy, I think even if the stock price were to go down,
Hmm.
you are learning so much about how stock prices can go up and go down. So I think it's definitely the apps are great and doing your own research is really vital.
Yeah. I think the research part goes back to what we were saying before with coaching. Find that mentor, that person that you can know and trust, and maybe they have YouTube or a podcast. And then research what they say. Don't just do what they say because they might not know. Like you think they're the mentor, but then double check, right?
Yeah.
Research on your own and make your own opinions. I think that's big right now with social media and so many messages and influences coming at us. It's hard to know, okay, what do I actually think? Let me pause for a moment without someone telling me all this stuff or having all these voices in my head and just think for myself for a minute and maybe write down
100%.
pros and cons or write down things that help you to decide what to do.
Yeah. And some of the talking heads on TV that people watch, when they put some of their investment recommendations to the test, you typically find out they aren't doing as well as you might think. So yeah, I agree with what you said, Jen, 100%. Do your own research, and it's your research, not someone else's for you.
Yeah. What advice would you give someone who's been doing real estate investing and been doing stocks? What's the next thing for them? What else would you recommend if they're already doing that? They have their finances in order. What would you recommend?
When most people think about taxes and saving money in taxes, most people think about a CPA. And
Uh-huh.
CPAs are a vital component of someone's overall financial plan. But CPAs do tax preparation. So they're looking at saving money in taxes for last year. And they're rearward thinking, how can they save money in taxes last year? For people that are investing in real estate investing, stock investing, how are they managing the tax impact going forward? And that's what financial planners will do, is we are mitigating the tax bite, not just rear looking, but forward looking. And over the course of a relationship with a client, we potentially can save our clients hundreds of thousands, if not millions of dollars more in taxes than their CPAs ever will. Not because the CPA is not qualified or not smart. No, that's not the case. It's just it's a different type of thinking. Again, it's more
Mhm.
of tax prep versus tax planning. So
Mhm.
if someone feels that they have the kind of their finances in order and they have good portfolios, but they've never really taken that look at what are they paying in taxes, then
Mhm.
they're missing a piece and they really should
Right.
review that too.
Yeah. Yeah, I was just learning a tax strategy. I can't do it anymore because my kids are too old, but you
Mm.
can pay your kids if you have your own business. You can pay your kids up to now it's up to $14,000 a year or 16,000. Anyway, it's starting to get more than what it
Hmm.
was when I could actually pay them. And that's this tax strategy that I think a lot of people don't know about. If you have your own business or if you have real estate and you have a real estate business because you own the real estate in different LLCs, then you can pay your kids, which is really tax write off for other things you need to buy them. So, but there's
100%.
a right way to do it.
Oh, yeah. Yeah. I work with a lot of business owners and we do a lot of the retirement plan design of how they can put a lot of money away for their own retirement and save money in taxes, as well as keep and retain and reward key employees. But when they
Mhm.
see the amounts of how much money they're able to put into their retirement accounts and how much money they're able to save themselves in taxes, it's
Mhm.
usually like this like shock. I didn't ever know that I could do all this. Again, this
Yeah.
is tax planning.
Right. Yeah, and your CPA isn't going to just come out and tell you these strategies of renting out part of your house to yourself or paying your
Right.
kids because they don't know all the laws. But financial planners, you guys seem to know what you're doing, helping out.
Well, the CPAs kind of have it. Their roles are getting harder and harder because clients want more and more, demanding more and more out of the CPAs that a lot of times goes outside of their area of expertise. The problem
Hmm.
is that CPAs are so incredibly busy. Used to be tax time was the busiest time of the year for CPAs.
Yeah.
And they're working 120-hour weeks from February through April 15th. But if you talk to any successful CPA now, most of them are saying there is no downtime anymore and that the
Yeah.
entire year is just go, they're running their engines in the red. So if something comes to them where they might be able to help a client that's really outside their expertise, they're so busy, they're really not able or in their position to make that connection to help that client to that next level or plug them
Right.
that into that next area of expertise. So it's really hard for them. So
Yeah.
that's where I'm a little biased, but a great financial planner is a good member of the team too.
Yeah. That's great. What's one last story that you would like to share about maybe a client or someone that you've worked with that you really helped get their portfolio in order?
I think one of the ones I really like sharing is when COVID hit and when COVID was raging for everyone. I had a client who retired about 4 months before COVID hit. Remember, everything was shut down. The stock market was tanking. There's so much uncertainty. We're wiping down our groceries, thinking they've got COVID from Amazon. You remember? We're all wearing masks. Just crazy times. And he retired from New Jersey, went to Florida, and was freaking out a little bit. And understand that the stock market's going down, doom and gloom on the TV.
Mhm.
But we had structured his retirement plan so airtight that actually he was making more money in retirement than he was when he was working. And it was one of the days the stock market went down like 1,100 points, which is just they
Mhm.
were historic moves. And
Yeah.
he was out before they shut down the golf courses, the parks and everything. He was about ready to play golf that day. And he called me. He's Eric. He's, I'm worried about COVID. I'm worried about my investments. I'm like, let me ask you, Eric, what should I be worried about? And I reiterated what we had done for him on his plan and the different components of his overall strategy. And I said, some of your accounts have gone down because the stock market's gone down with COVID, but we were very confident that's going to come back once the uncertainty of COVID goes away, which they did.
Mhm.
The other parts of the strategy were so airtight. I said, you really have nothing to worry about because even with all this doom and gloom, you're not going to feel the bite of this. So the biggest thing you need to worry about is hitting the ball straight on the golf course.
There you go.
And it was this feeling of relief that he's okay, I'm good to go. But it was just showing that strategy can help take away a lot of the lack of confidence or the
Mhm.
discomfort or the stress of
Mhm.
not having a strategy.
Yeah.
The Boy Scouts have a saying, the time to have the map is before you enter the woods.
Yeah.
Very true with financial planning and retirement planning.
Yeah. I really like that. That's a good saying.
I
And I
say that
think
at the
that's
end of my
kind of
podcast, as I give that saying, that line.
Yeah, I really like it. And I think having your eggs all in one basket, like you're just explaining that story, is having so many baskets that it doesn't matter.
Yes.
It's all going to work out.
Yeah.
Everything's going to be great.
Yeah.
So that's great. Thanks, Eric, so much for being on the show.
Thank you, Jen.
Tell us a little more about where people can go to get more information if they want to work with you or with your company, Argosy.
LinkedIn is my profile on LinkedIn, but also emangold.com is my website. emangold.com is my website. A lot of freebies there, a lot of ebooks, videos, how-tos, videos of the month, charts of the month, which shows different charts in the economy and everything. And if someone wants to set up a consultation with no obligation, there's a clickable right on the website that they can click and set up an appointment.
Great. Thanks, Eric. We'll put those links up in the show notes. People can go and find you there and get more of your information.
Thank you, Jen.
Great. Thanks everyone for watching today or for listening. Please subscribe to this and share it with a friend if you know someone who would like this information. And we'll see you next time on Elite Expert Insider.
Hey, are you looking to increase your revenue, build credibility, and elevate your brand? This podcast is brought to you by Elite Online Publishing, an innovative publishing and full spectrum marketing company. They will publish and market your book to make it a #1 bestseller. Becoming an author is the best way to market your business. So contact them at eliteonlinepublishing.com today. All of their authors become #1 bestsellers.